Welcome to The Explainer. Right now, we're looking at a completely vibrant, super dynamic landscape, the African tech ecosystem. Just between July 13th and 19th of 2026, we literally saw a pivotal week of regulatory developments sweep right across the continent. Governments are rapidly rethinking how they oversee digital markets, artificial intelligence, and intellectual property. It's a wildly fascinating time for innovators, tech professionals, and policy leads navigating this space. So let's just break it all down. Okay, let's dive into this roadmap. First, unified governance in Africa. 2, Kenya targets digital gatekeepers. 3, modernizing infrastructure and payments. 4, Nigeria explores AI and crypto. 5, Rwanda regulates digital lending. And finally, 6, tracking future policy compliance. Let's get right into it. Section 1, Unified Governance in Africa. So we're currently seeing a decisive move, particularly from East and Southern African regulators, to just fundamentally rewire how they govern technology and digital markets. Now, what's really interesting here is this insight, which highlights a massive shift away from patchwork governance. You know how tech policy usually evolves, right? You get a law over here for telecoms, a totally separate one for copyright, another for data. It just creates this confusing web. Well, what we're seeing right now is a highly deliberate strategy to finally stitch all that patchwork together. So what does this actually look like on the ground? Basically, it's the rise of unified statutory bodies. These are centralized regulatory authorities designed to replace those fragmented sector-by-sector institutional patchworks. So instead of dealing with, say, 4 different agencies for one single digital product, tech companies will increasingly deal with just one streamlined body. It's an absolute game changer. This is rapidly becoming the new standard for managing both intellectual property and digital market competition across Africa, making enforcement so much more efficient. Moving on to Section 2, Kenya targets digital gatekeepers. Let's look at our first major case study in this great consolidation to see how it actually plays out. All right, so Kenya's Competition Amendment Bill of 2026 just progressed to its second reading in Parliament, and it introduces a fascinating legal concept, the strategic market position. Nairobi is effectively putting a target on massive digital platforms that act as gatekeepers to the economy. And the goal here, it's proactive. They want to curb unfair market conduct before these dominant digital players become so entrenched that local startups can't even compete. It's a really sophisticated evolution of antitrust law. But Kenya isn't stopping at competition law. Running parallel to that, the Kenya Intellectual Property Bill of 2026 is also moving through the legislature. This bill literally dismantles the old institutional patchwork by creating KIPA, the Kenya Intellectual Property Authority. By putting industrial property and copyright under one single roof, Nairobi is setting up a much more streamlined, yet considerably more aggressive enforcement environment as we move into 2027. Oh, and a quick but super critical reminder for the tech policy leads joining us on this explainer today. Consultations for Kenya's Draft National Intellectual Property Policy and Strategy, or NIPS, are urgently requiring feedback. The window closes on July 31st, 2026. This is the whole strategic framework aligning IP with national economic goals. So if you operate in this space, you definitely need to make your voice heard before that deadline. Section 3, Modernizing Infrastructure and Payments. Let's head south and see how this policy evolution builds right into the foundational layers of the digital economy, physical infrastructure, and digital payments. Notice the really delicate balancing act South Africa is trying to pull off here. The Department of Communications and Digital Technologies just released draft regulations for the rapid deployment of electronic communications networks. On one hand, they desperately need speed to expand broadband, which means bypassing those tedious local-level bureaucratic bottlenecks for land access. But to balance that out, they're protecting property rights by imposing a strict duty of care on network licensees. It's a very pragmatic approach to fast-tracking digital infrastructure, without trampling on local protections. Meanwhile, Zambia is moving at absolute lightning speed to modernize its financial rails. For years, they operated on the 2007 Payment System Act. Then, boom, early 2026, a new bill was assented to, and just this July, the National Payment System Act No. 5 was officially gazetted. The sheer speed of this legislative overhaul really highlights how much of a priority digital financial modernization is for African nations this year. And while the exact commencement date is still pending from the minister, the Bank of Zambia is already actively preparing to oversee a vastly more robust clearing and settlement regime. This is absolutely vital because it forcefully aligns Zambia's digital finance standards with strong regional peers like Uganda and Mauritius that makes cross-border trade and digital innovation so much more seamless across the entire region. All right, Section 4, Nigeria explores AI and crypto. Let's shift our focus to West Africa, where Nigeria is really tackling the bleeding edge of tech policy. Number 1. That is exactly where Nigeria has just been ranked on the latest Global Artificial Intelligence Governance Index. It's a massive achievement, and it genuinely underscores the country's proactive stance on regulating tomorrow's technology today. But, we do have to look at the full picture here. Domestic critics are raising some highly valid concerns. They note that despite this incredible global ranking, actual local implementation still faces some pretty significant hurdles. Specifically, there's an urgent need to lay down solid ethical guidelines and clear data privacy frameworks. The theoretical governance is absolutely there, for sure, but the on-the-ground groundwork for AI ethics, that's still very much a work in progress. Nigeria is also jumping into the complex world of cryptocurrency. President Tinubu just signed an executive order to coordinate virtual assets. And what's smart here is instead of creating an entirely new, cumbersome regulator from scratch, the order harmonizes oversight by splitting asset types between existing authorities. So if it looks like security, the Securities and Exchange Commission handles registration. If it involves payment, settlement, or custody, the Central Bank of Nigeria steps in. Now, to make sure these agencies aren't stepping on each other's toes, the order actually establishes a Virtual Asset Council, which is chaired by the central bank. This council is bringing some much-needed clarity to a crypto sector that was, frankly, previously exposed to really fragmented, siloed supervision. Plus, they're introducing a regulatory sandbox and a dedicated tax policy, giving innovators a safe space to actually test out new financial products. Section 5. Rwanda regulates digital lending. Let's bring our attention over to Rwanda, a nation that's deeply focused on how consumer protection absolutely must evolve alongside fast-moving fintech innovation. Rwanda is setting an incredibly high bar for digital lenders right now. New reporting indicates they are severely tightening oversight for fintech operators. Get this. If you're using AI-driven credit systems, that AI must be explainable. There literally must be human oversight in the loop. And on top of that, lenders are now subjected to much stricter KYC, Know Your Customer rules, along with mandatory affordability assessments before issuing any digital loans. And these aren't just isolated rules in Kigali, right? They connect to a much broader momentum across Africa. Regulators are hyper-aware of the risks of aggressive digital debt cycles. Rwanda's strict new requirements reflect this whole continent-wide trend focused on shielding ordinary citizens from predatory lending practices. They want to make for sure that financial inclusion doesn't accidentally morph into financial exploitation. Finally, Section 6, Tracking Future Policy Compliance. Let's summarize what tech policy leads, founders, and innovators should really take away from all this rapid change. This idea here hits the nail on the head. We are watching a real-time shift away from theoretical, high-level principles. Governments are rolling up their sleeves and building actionable, multi-level implementation frameworks. Policy isn't just talk anymore. It's becoming tangible compliance requirements that will completely dictate how digital products are built and deployed. And I really want to leave you with this powerful thought. Sectoral regulation is becoming digital regulation. Whether you are in healthcare, competition, agriculture, or finance, governments are rapidly embedding digital governance directly into everyday sector legislation. You just can no longer separate tech policy from regular policy. They are quickly becoming the exact same thing. This landscape is moving incredibly fast, and staying compliant means staying informed. If you want to dive deeper into these policies and ensure you remain ahead of the curve, you can track all of these critical updates directly on the NTPAI Policy Tracker platform. Just head over to www.ntpi.nexustechpolicyadvisors.com to monitor the future of Africa's digital governance. Thanks so much for joining me on this explainer. As sectoral regulation becomes digital regulation across the entire continent, the ultimate question is your organization prepared to adapt to this unified future?